Eric Muathe for the week of February 10th, 2014. Let's take a look at the markets here before the market opens. And as you can see, with about 1.5 hours to go, market cooled down about 28 points on the Dow, 3 points on the S&P 500, and on the Nasdaq, slightly down just about 2 points, really unchanged. And take a look at Asia overnight, and we see that the biggest mover was China, up 2%, and Japan was up 1.77. You see that Europe is pretty much unchanged as of right now. Take a look at commodities, and we see that silver is up about 1.5%, gold is up about 1%, natural gas is down about 2%. Let's take a look at the charts here, and you can see for this week, let's pay attention to the Dow action on the weekly chart. On the RSI, you can see every time we moved back above the 50, this market had a nice bounce over the last couple of years. Every time we move above the 50 on the weekly RSI, we get a nice bounce in the market, and you can see we closed back above 50 and at a value of 50.52. So if we hold above that, that's bullish. Let's be aware that if we crack back below that, that could also be bearish. Another way to look at this is to draw a line connecting the lows like that, somewhere around there. So as long as this market is holding this support line here, that's fine. But if we crack below that, might be a little bit bearish. Take a look at the Nasdaq weekly, and it has a trend line support that looks like that on the weekly. So if it can hold above that, this line here on the RSI on the weekly, it could continue bouncing. It ended last week up above the 10-week moving average. Let's be aware, if we crack below that, that's going to be a fresh sell signal. Take a look at the Nasdaq Daily. It on the daily was bouncing off this level here. This level has been where it's been bouncing off. The most recent bounce was here, which was this nice entry point. So we formed a double bottom here, and it seems like the market could conceivably move higher. Take note of where we close, just above 50. So if we crack back below 50 on a daily basis, expect a big down day. Take a look at the S&P 500. On the weekly, there's a trend line somewhere around there, and you can see we bounced off the trend line here. So anything above that line is bullish. Anything moving it back below that is going to be bearish. S&P 500, from a daily view, right there is where it's been bouncing, somewhere in that general area, coming from this nice entry point, which was here. We bounced off that line here, which was here, and we recently did form that formation there, and now we seem to be moving high. Let's take note of the fact that we have a 50-day moving average here, which could be resistance, and also the fact that we closed just above 50. So if we crack back below 50, expect a big down day whenever that happens. S&P 500 from an hourly chart, and we start seeing that the market needs to move above this 1798 level. So 1798, which is this hourly closing high somewhere there. So if the market can hold above that, that's bullish. If it can't hold above that, then that's short-term resistance right there. Also take note of the fact that somewhere around here on the RSI, on the hourly, is where you'd expect resistance, because this was the break coming to the beginning of the year. There was resistance here, which was this high level there, and so we are back in this general area. If we roll over like that, then this becomes another short-term sell signal, maybe long-term sell signal. Eric Muathe, good luck, peace, and blessings.